According to Statista, worldwide spending on artificial intelligence is expected to grow beyond $184 billion in 2024. That would be an increase of more than $50 billion from 2023. What's more, their forecast suggests that spending on artificial intelligence could grow past $826 billion by 2030. Nvidia and Palantir are in an excellent position to benefit from that growth. But for stock market investors, which one is the better AI stock to buy today, Nvidia or Palantir? I'll answer that question for you in this video, comparing those two AI stocks across critical financial metrics like revenue, operating profit margin, cash flow from operations, what their earnings per share look like over the next 5 years, and then their valuation. Of course, the best company makes a poor investment if you pay too high a price. So there's a lot to do here. Let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Let's start with revenue growth. And when you look at Palantir and Nvidia over the last 3 years, you'll notice the explosive revenue growth here from Nvidia. 262% revenue growth in its latest quarter, coming off the previous quarter where it also grew revenue by roughly 200%. Management is forecasting over 100% revenue growth when they report earnings again on August 28th. Palantir has done a good job, but nowhere near Nvidia here. 27% revenue growth in its latest quarter. I wouldn't be surprised if Palantir continues accelerating their revenue growth because Palantir's new strategy is gaining traction among enterprises. We all know Palantir has done a great job with governments. Governments have larger budgets, and so they can go after the best-in-class service, which, by the way, Palantir is the best-in-class in its category. But the difficulty is, businesses, many of them are not as large and cannot afford Palantir services just because it's so expensive. But Palantir lately has done an excellent job gaining traction within businesses, and that's a much larger opportunity for Palantir longer term, which could accelerate revenue growth for the AI software company. Operating profit margin is a similar story. They've both done an excellent job expanding their operating profit margin, but Nvidia again holds a big advantage here with an operating profit margin of 59.84% compared to just 11.78% for Palantir. Now you'll notice Palantir has done a great job expanding and increasing its operating profit margin, as has Nvidia, but it's kind of difficult to compare yourself against Nvidia, which is just one of the best businesses in the world. I'm trying to do that here in this video just to take a look at another AI company that potentially could make a better investment compared to Nvidia. But Nvidia, with an operating profit margin of 59.84%, is near the best of the best in terms of operating profit margins in the world of companies. So there are relatively few companies that exceed Nvidia in terms of operating profitability. Looking ahead over the next 5 years and the earnings per share expectations, on Wall Street, the analysts that are following Nvidia stock, they think it's going to grow its earnings per share by 46.35% over the next 5 years, each and every year over the next 5 years. That is certainly robust earnings per share growth for any company, but especially for a company the size of Nvidia that's generating over $25 billion in quarterly revenue. To be able to grow your earnings per share when you're a company of that size by this magnitude is one of the better growth rates historically for a company of this size. It's just magnificent what Nvidia is achieving in recent quarters and recent years. Palantir, not to be undone, the analysts on Wall Street expect it will grow its earnings per share at 85.19% per year over the next 5 years. Now, that's a considerably larger growth rate compared to Nvidia, and that doesn't surprise me because Palantir is a smaller company and it has better incremental earnings opportunities ahead. Still, growing 85% per year over a 5-year period would be an excellent rate of growth. And if it does indeed achieve this growth of 85% over the next 5 years, Palantir stock investors will undoubtedly become wealthier than they are today. Same is true for Nvidia. If that company grows its earnings per share at the rate that is expected from Wall Street over the next 5 years, Nvidia stock investors will undoubtedly become wealthier as well. The big question mark is if these growth rates are actually achieved. Remember, nobody knows what's going to happen in the future, especially 5 years ahead. That's a long time. But these analysts are making their forecasts, and they are professionals, and they have relationships with these companies' management teams, and they're pretty good at making forecasts of what companies will do over the next several year periods. And so if you're going to look at any forecast, the forecasts from Wall Street analysts about the companies they're following are reasonably good forecasts to observe. Now, comparing these two on cash flow from operations to sales, Palantir is much closer on this metric. The biggest difference between operating profit margin and cash flow from operations to sales are non-cash expenses like stock-based compensation, which Palantir uses in large sums. So in this metric, Nvidia generates 50.8% of cash flow from operations to sales, while Palantir is at 28.58%. Palantir and Nvidia have done a great job expanding this metric as revenue has grown. I like to see that from companies. I like to see profits and cash flow expand as revenue grows. That demonstrates to me that companies have economies in scale, which in simple terms means that when revenue grows, their costs don't grow as quickly as revenue grows, right? Because you have some costs that are fixed that don't increase with sales. Things like the rent on your corporate headquarters, salaries for your senior management, things of that nature that don't grow along with revenue. Some items do grow along with revenue. For instance, if you have your salesmen on commission basis, when your revenue grows, your costs will also grow because the salesmen are earning a commission on those sales that they're locking in. Now, that's not too big of a deal for a company like Nvidia and Palantir, but some companies do have that within their business model. So there's the difference between companies that demonstrate economies in scale and those that don't. And for investors, it's better to consider companies that have economies in scale because profits grow faster than revenue. And that's an underlying foundational positive that leads to great shareholder gains in the long run. And finally, I wanted to compare these two on valuation. And the metric I chose to use here is the forward price to earnings ratio. And surprisingly, Palantir stock is trading at a valuation that's more than twice as large as Nvidia. Palantir trading at a forward PE of 72, whereas Nvidia is trading at a forward PE of just 32. Now, one of the reasons for this could be because Palantir has better earnings per share growth expectations over the next 5 and 10-year periods compared to Nvidia, which is already a massively sized company that can only grow at a certain rate over the next 5 and 10-year periods because before it becomes too large to demonstrate those rates of earnings. Whereas Palantir is small enough where it can grow quickly over the next 5-year periods, 10-year period, and beyond. Because it's such a small size, it can continue sustaining elevated levels of growth for a longer period of time. And so investors are willing to pay a higher price for a company that has longer earnings per share robust levels of expectations. Still, if I was to pick between these two AI stocks to buy, I would buy Nvidia. I think Nvidia trading at a valuation of less than half than Palantir is a bargain. I would go with Nvidia because the company's better cash flow, better profitability, better revenue growth, and reasonably strong earnings per share expectations over the next 5 years. I think I take the discount and buy Nvidia stock. Now, these are both excellent companies, but if you forced me to pick just one, I would pick Nvidia. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.